Good morning and welcome to Charting the Markets on Friday, the 14th of March 2023. Let's begin by having a look at today's economic calendar. And at 1:30 p.m., we've got the US retail sales out for March, and we expect these to fall by 0.4% month on month. And that is then followed at 3 p.m. by the US Michigan consumer sentiment for April. And here we expect the index to fall to 61 from 62 in March. We also have earnings seasons kicking off with the JP Morgan Chase first quarter earnings expected to come out before the US session opens, and then later today, Citigroup first quarter earnings, Wells Fargo and United Health. Now, with estimates having been pruned in recent weeks and negative guidance abounding, there is potential for some upside surprises. But today's key news will actually be the commentary around lending activity and credit conditions with regards to those banks I just mentioned, and particularly so with regards to the banking crisis. So that might drive equity markets to some degree later on today. And so far, we are actually looking very bullish, and that was on the back of weaker than expected US PPI data coming out of the States yesterday, with month-on-month March PPI dropping by 0.5% versus an expected 0% change. And that, together with a rise in jobless claims, has led to US equity markets rallying overnight, which then led to Asian markets rallying also, and which then pushed European markets to a higher open. And as you can see here on the daily financial bet of the FTSE 100, we are currently continuing the upward momentum, and we are now testing this key resistance area I've been mentioning for the best part of this week, between the mid-January high and also the late February low, around 7,856 to 7,876. And we can see here that we are pushing higher and are approaching the high seen at the beginning of March at 7,976 and also the psychological 8,000 mark. We'll have to see whether the current upside momentum in the FTSE 100 can be maintained into the end of the week today, Friday being the end of the week, because we can see here we've had 7 consecutive sessions of higher prices for the FTSE 100, which is quite rare, to be honest. And it is quite positive for the bulls short term. Now, the support on this uptrend for the FTSE 100 can be seen along the March to April support line, which can currently be seen around 7,808. But from a technical perspective, we also have the previous resistance line going back to February of this year, which now, because of inverse polarity, acts as a support line, and that is around 7,788. So basically, as long as that holds, further upside is likely to take us back towards the psychological 8,000 mark later this month, next week, perhaps further upside to be seen here with regards to the FTSE 100. And the picture is quite similar with regards to the DAX 40 contract. As you can see here on the daily financial bet, we briefly rallied to levels last seen and last traded in it was, I believe, January of last year. And here we are heading towards the psychological 16,000 mark, which is slightly above the current April high at 15,832. So again, here we are now short-term perhaps consolidating ahead of the earnings season kicking off later on today in the US. But we rallied yesterday on the back of the weaker inflation data coming out of the US, which gives hopes to those market analysts and traders that the Fed will actually, because of the negative data, perhaps stop its tightening stance after the next meeting. So from a technical perspective here, we can see we're being supported by the March to April uptrend line, which currently comes in around 15,730, and also by yesterday's low on the DAX 40 at 16,657. But as long as we stay from a medium-term perspective above the last important relative low, and that is to say the 5th of April low at 15,481, further upside is likely to be seen, especially since, as you can see, we have a series of higher highs and higher lows on the DAX 40, and that is being confirmed by the reading of the relative strength index, which is also showing higher highs and higher lows. So further upside likely to be seen in the days and weeks ahead, taking us towards the 16,000 mark for the DAX 40. And the picture is quite similar with regards to the Nasdaq 100. This was our trade of the week, our trading trend actually on Wednesday. We went long, and so far this trade is looking good, because as long as we remain above Wednesday's low at 12,819, excuse me, on a daily chart closing basis, the upside is still intact, with the current April high at 13,226 representing the next upside target. And above there, as you can see here, we've got the high going back to August of 2022 at 13,722, which is also being targeted in the coming weeks and months. The US dollar has also been negatively affected by the weaker than expected inflation data out this week, earlier this week with regards to CPI, and then also yesterday with regards to US PPI, which came in at a weaker than expected 0.5% month on month for March versus an expected 0% increase, and that has led to a very swift ascent in the euro-dollar chart on the back of that weaker US dollar, taking us to levels last traded in I believe it was March of 2022. So we're trading in 13-month highs and are approaching the March 2022 high at 111.85, having now risen above the psychological 110 mark, and also above the February high at 110.33. So we are currently on track for a fourth consecutive day of higher prices with regards to euro dollar. And if we close on a weekly closing basis at around current levels, as we can see here on the weekly chart, we will be heading up towards the red line here, which is the 200-week simple moving average at 111.20, ahead of that high I just mentioned at 111.85, taking us back to March of 2022. So further upside likely to be seen with regards to the euro-dollar exchange rate. And from a technical perspective, as long as we remain above the last reaction low, that is to say the low from Monday at 108.32, the medium-term uptrend remains intact. As you can see here, we have a series of higher highs and higher lows, meaning that further upside is likely to be seen here. And similarly, the picture is also looking quite bullish with regards to the British pound against the US dollar, that is to say cable, which briefly today rallied above its 125.25 early April high, and since then has come off again slightly. But if we can look here at the weekly chart, we can see that we are now trading above the highs seen back in December and also in January, between 124.48 and 46. And if we were to close on a daily chart closing basis, and because today is Friday, on a weekly chart closing basis above these levels, then for me we have broken above this key resistance area, which would mean that we could then be heading back up again towards the May 2022 high at 126.67, and then also reach the 61.8 Fibonacci retracement of the entire 2022 to 2023 decline at 127.45, and then take us back above there towards the red line here, the 200-week simple moving average at 128.73. And as you can see, we are currently on track for the fifth consecutive week of higher prices with regards to cable, and we basically will remain bullish as long as we stay above the last reaction low, that is to say Monday's low at 123.45, with further upside likely to be seen, as we also see here the March to April uptrend line acting as support potentially going forward and currently coming in around 124.40. Now, I'd like to also have a look at the Australian dollar versus the US dollar. And as we can see here, the weakness in the US dollar on those softer than expected inflation data coming out of the US has led to a sharp ascent in the Aussie US dollar cross, taking us back to the early April high at 67.93, which at the moment is still capping the upside. And as long as it does, we may actually short-term retrace back to the red line here, the 200-day simply moving average at 67.45, and perhaps also retest the mid-March high at 67.17. But if next week we were to rise above the current 67.96 high we made on Thursday of this week, then there is scope for the mid-January and early February lows between 68.55 and 68.72 to be seen in the next few days and weeks. So short-term upside momentum is seen on this currency pair on the back of the weaker US dollar, which on the dollar basket has hit a one-year low. Commodity markets have also been affected by the depreciating US dollar, and we saw yesterday the price of gold surge much higher and take us close to this year's high on the back of that weaker US dollar, and as the US inflation data is pointing to a drop-off in the inflation rate in the US. And here we can see we rallied to $2,048 per troy ounce yesterday, taking us close to the high we saw back in March of 2022 at $2,070 per troy ounce. And slightly above there, we also have the August 2020 high at $2,075. So you can see here, we now have seen 2 consecutive weeks of higher prices with regards to the pressured metal. And it looks as if gold is gunning for these all-time previous highs between $2,070 and $2,075. And this will remain the case as long as we stay above the last reaction low, that is to say Monday's low at $1,982 per troy ounce. But above that, we have quite a lot of good support. We've got the highs seen last week at $2,032 as minor support, and also the whole area between $2,009 and $2,003. The late March highs, which could act as support together with this March to April uptrend line. But gold is not the only precious metal which is rising quite steeply. As you can see here, this is the price of silver, which has impressed investors of late by rising from its $19.90 level at the 10th of March by nearly 30%, as you can see here, to the current $25.50 high, taking us back to levels last traded in April of last year. And here we have the $26.22 mark, which is the next upside target for the price of silver, ahead of the March 2022 high at $26.95. Now, here the uptrend is very steep, so we might flatten out in the next few days and maybe lose some upside momentum. But basically, as long as $25.41 the uptrend line holds here, further upside is likely to be seen next week. And only a currently unexpected reversal to the downside and fall through the last reaction low at $24.56, that is last Thursday's low, would make us question the current upside momentum we're seeing in silver. But as I say, I expect further upside to be seen in the days ahead. Now, I'd like to finish up on Arabica coffee, because the price of coffee, because of drier weather and tightening of supply, has risen to levels last seen in October of last year to around $19 to around $1.98 per pound with regards to the Arabica coffee futures, the frontline futures, as we can see here on the daily financial bet. And we have also managed to, for the first time since September of last year, close above the red line here, which is 200-day simple moving average at $1.89. And that is actually quite bullish and means that we could, over the next few days, hit the psychological $2 mark. above which we then have the low from September of last year, of 2021, oh no, actually of 2022, so of last year, come in at $2.09 or so. So further upside likely to be seen, provided we remain above the red line here, the 200-day simple moving average, and also the last reaction low, which is at $1.65. But that being so far away, I wouldn't really look at that anymore, but probably focus more on whether we can hold above the 200-day simple moving average with regards to the price of Arabica coffee, because as long as that's the case, further upside is likely to take us towards the $2 mark and higher still. Thank you very much for watching Charting the Markets with me, Axel Rudolph. Please feel free to follow me on Twitter. My Twitter handle is @AxelR_IG.